for joining us today. My name is Olivia Ross. I'm a community engagement partner here at Citizens. I will be your host and one of today's speakers. Some quick housekeeping you may be able to see. We are going to be recording this session so that we can circulate a replay along with the materials that we'll review today at the conclusion of the call. All participants have been muted on entry, but we encourage you to keep up with the use of the chat to interact and ask questions throughout. We have a jam-packed hour planned. Here's a look at all that we're going to cover today. We'll start off with brief introductions from each of our speakers before diving in a bit about the series and each of the organizations represented today. As I said, my name is Olivia Ross. I'm a community engagement partner here at Citizens based in Philadelphia. I'm so excited to kick off today's conversation. I'm joined by a few wonderful people. First, I will turn it over to Jackie Zimmerman, one of Citizens' good friends from Mental Health America, for a quick intro. Jackie?
Hi, everyone. Great to see you this afternoon. It is lovely to see so many folks joining us from all over. Thanks for putting those in the chat. I am the manager of public education partnerships and e-learning at Mental Health America, joining virtually today from Milwaukee, Wisconsin, but really grateful for this partnership with Citizens.
Great. Thank you, Jackie. Next, Amy McCarthy, one of my colleagues who will be sharing her knowledge and expertise with us today. Amy, thanks so much for joining.
Sure. Welcome, everyone. I'm joining you today from Washington, D.C. I'm on business travel. I'm normally based remote in the Outer Banks of North Carolina. I'm a consumer bank risk director at Citizens, meaning I oversee the risk the bank takes in offering consumer debt products to the public. So card, auto, student, mortgage, all of those things that you potentially may have in your life where we're extending credit on behalf of, the bank. So very timely topic for today.
Great. Thank you all. As I mentioned, today's session is the second in a series that Citizens and Mental Health America are collaborating on. Our goal through this three-part series is to start and continue a conversation on the role of economic security and its impact on mental health. So today's session is going to focus on building a healthy relationship with money. If you missed session one in the series, we'll be sure to circulate the link to the replay from that session where we talked about the importance of credit health. And then the series will culminate in our third session to be held early to mid-December with a discussion that will include representatives from Citizens, from Mental Health America, and from one of Citizens' national partner organizations, Junior Achievement, and that will explore the roadmap to achieving financial health. So we are so excited to have everybody on this journey with us. First, just wanted to share a bit about Citizens as a bank. Citizens Financial Group is one of the nation's oldest and largest financial institutions. We're headquartered in Rhode Island, but we have colleagues or customers in all 50 states, and the bank offers a broad range of services to clients in different sectors, including individuals, small businesses, large corporations, and institutions. At a glance, Citizens' mission is to help our customers, our colleagues, and our communities reach their potential. And we do that in a variety of ways, including by supporting our communities. So as I mentioned, Citizens has a presence in all 50 states. Each place faces its own unique social challenges, and we strive to maintain a deep understanding of those so that we can develop the innovative solutions required to help people thrive, help businesses succeed, and help communities flourish. While specific challenges do vary by geography, the reality is that some struggles are shared across the board. We know that financial concerns are top of mind to many, with nearly 3/4 of people citing inflation as a significant personal anxiety. Through our survey with Junior Achievement, we learned that 50% of teens are concerned when it comes to financing their future. So these are just some of the worries that are consistent and ever present in the minds of many. That's why Citizens significantly focuses our efforts in the financial empowerment space. At Citizens, we're committed to helping people manage their money better, which includes more than $2 million in grant making to nonprofits who help people and hosting knowledge building seminars like these. We're committed to leveraging all of our resources, including our vast colleague network, to connect all individuals with the knowledge and skills they need to manage their money effectively at all stages of life. Of support of these efforts, though, are our partnerships. I mentioned Junior Achievement a bit ago. They're a national organization that we partner with to help prepare young people with the resources they need to overcome economic inequity. And we activate our colleagues to share their expertise in the form of delivering financial literacy across and outside of our footprint, like we will here today. And then we rely heavily on our community partnerships, including that with Mental Health America, which has allowed us to create this series together and expand the breadth of our impact. So with that, I'll turn it over to Jackie to share more about Mental Health America and the resources that they have available.
Absolutely. Thank you, Olivia. Thank you for that. And welcome, everyone. I know that some of you might be joining from the invite from Mental Health America. Some might be joining from the invite from Citizens. So for those of you that Mental Health America is new to who we are, we're the nation's leading nonprofit dedicated to the promotion of mental health, well-being, and illness prevention. And we mainly work in these areas of community education and engagement, like we're doing here today. We have mental health screening and our research program. Our screening provides you with a service if you're noticing some symptoms or some worries that you might have a mental health condition. If you go to our screening site, and Naya will type that in the chat for you, you'll be able to take a variety of different tests that will tell you your likelihood for experiencing one of those conditions. They're scientifically validated tests. And not only do they provide you with that information, but they provide you with next steps on what you can do to take care of your mental health. We also work in advocacy and public policy, provide workplace resources, have youth programs and peer leadership, and have a variety of information and referral services on our website. A few of our specific resources that are helpful to today's conversation, we have some info on just general screenings and conditions that Niall will share, and then a few articles on managing your money, paying for care, which leads me to our next slide of really why Mental Health America got into this partnership with Citizens and how these two things are connected is that we know a big area of stress and worry can be finances for people. And it can be kind of this reciprocal role of, if you're diagnosed with a mental health condition, paying for care, being able to afford that, your health insurance, that might add in additional stress, additional financial strain. And reciprocally, if you're experiencing that financial stress, that financial strain, that can impact your mental health. We know that 1 in 5 Americans struggle with a mental health condition. The stress of finances can have a significant effect on your mood and health. I know Olivia shared some great statistics earlier too that just kind of showed this connection of worry, anxiety, and strain that finances can put on people's health. And in the US, financial literacy is hovering around 50%. So these conversations are really important to be able to provide you with some skills that can hopefully help you build your familiarity with finances. Sometimes it can seem like a really daunting thing. So we're trying to break it down simply, which is why we have Amy here with her fantastic breadth of knowledge to be able to share with you all today. So thank you, Citizens. We're excited.
Thanks so much, Jackie. And with that, I'll turn it over to Amy for the bulk of today's session.
Fantastic. Thank you, ladies, so much for the great introduction and also the amazing resources and facts that you shared. I truly do believe that mental health is directly tied to money. And I have to be honest, I'm going to start out by saying something I wish I knew a long, long time ago. I'm fortunate that I'm, at a good point in my life and my career, but I wish my parents or someone in high school sat me down and said, you will earn all the money you need for your life between about 15 and 60 to 65. That's pretty staggering when you think about how long you can live. You're born and you can live till 80 or 85 or 90 now with all the amazing advances that we have in the world with health, and not just physical health, but mental health. So having a healthy, relationship with yourself, your worth, your time, and your money, really to me is one of the things that I hold near and dear to my heart. I feel like you get your one body to live your life in. I try to take care of it. I try to, exercise. I try to have a positive attitude. And I also feel very, strongly about the fact that if I put my time and attention towards something that earns money, I'm very litigious about my time. I don't waste my time and I don't waste my money because I feel it's a direct reflection of how I feel about myself. So I just thought I would start with those thoughts. I will also warn you, I may not follow the PowerPoint. I hate the sound of my voice. I love interaction. I love that everyone shared all these wonderful places that you are. I saw North Carolina there. Today I'm actually in McLean, Virginia. Tomorrow I'm in Washington, D.C. I grew up where Citizens, was based. I have family in the Northeast, but I have family members who are members of this bank across the United States. So, we have different paradigms and different issues across the country, but we all really know that when we go to work and we earn money, that's our time. We're taking time away from other things that are important, like our families, our partners. So hopefully today will be very valuable. And I invite you to pop questions in there. Olivia and Jackie will keep me honest if there's a question in there that's relevant to what we're talking about. I'd love to slide over to it and answer it so that it's relevant and it doesn't wait. And please feel free. I will actually ask questions and ask, for polling answers here in the chat as well. So I hope you don't mind. Next page. All right. So I'm sure everyone knows what we're talking about here, but income, really, that's the money you receive for work. That's where you spend your time, where you're actually paid for it. Right now I'm volunteering. This time essentially would be free. But your employer, where you go to, where you, decided what your career is, what your job is in that time while you're working through school. Income that is earned is what you do and are paid for work. Also throughout your life, you may, accumulate savings or assets or investments. So your savings account is an asset. If you happen to have a car that's paid off, it's an asset. Investments as you progress throughout your career, a 401k, things of that type that provide some financial stability as we talk about that long life that we all want everyone to have and be both mentally and physically healthy. There's also, benefits that are available. We're very lucky in the US that our government does care about people and they want to help you in good times and bad. Sometimes there are, public benefits and entitlements. For example, if you use, assistance to purchase food, that's, a government benefit. When you get older, there's Social Security that you've put away in your taxes throughout your life, and that will help sustain your life, in retirement, if you will. Expenses. Now I'm just going to stop for a second because I was just chatting with one of my tenants and my HVAC has to be fixed and I suddenly have an expense. I have to buy a heater. What are some expenses that folks are facing in their current day-to-day right now? Like, do you have to buy a Metro card to take the subway to go to work? Do you pay for a car? Do you have credit card bills or student loans? Put in, there you go, medical, childcare, super important, car repairs, house repairs, very good. Yeah, these are all things that, and guess what? All of those were needs. They weren't wants. I didn't hear anyone say, oh, I have an expense that I'm saving for a vacation. That's a luxury. These were all needs. We have to pay for medical care. We, of course, have to make certain kids are taken care of while we're, away working. We have to fix our car because most often you're taking that car to drive to work, to go to your job. These are some great answers. Food, there you go. Yep, credit card. So, sometimes we use other people's money instead of our own, the banks, for example, and we have to pay that credit card bill. Medication, again, holistic kind of life view. Some of these things help maintain your health. Here we go. Excellent. Yeah, credit card bill, veterinary bills. All right. And so all of these debts and obligations or expenses. So your income is anything you have incoming that you get from work or possibly public assistance, or maybe the interest of a savings account. In the future, when you retire, it could be your 401k, your Social Security. And expenses are things that, are essential, your basic needs, food, water, shelter for you and your family. And then, there can be wants, say vacation, say, clothing, things that are beyond where your basic needs are met and obligations as well. So starting out with your basic income, your gross income is the amount that you have without we're taking deductions. So that's like the whole pie. And then we start taking pieces of the pie. Deductions would be taxes, maybe your medical insurance, maybe FICA or Social Security, as I mentioned. So things that are, taken to save for the future that you may receive benefit to in the future. But that last little piece, net income, that's what you have left to spend on those essentials and what your expenses are. Okay. I hear some pops in here. I'm wondering whether Olivia or Jackie will be sharing the slides later or no.
We will be, yes.
Awesome. And I do see some things that, are meatier topics that I'll be happy. Yeah, here you go. IRS, have to pay them. Utilities, great question. You have to pay them as well. Some of these, Shannon, I'll be happy to touch on, your note and that one a little bit later with the stressful ramifications. We can talk through that if you'd like. Okay. Let's see here. So, does anyone know what debt is? Is your credit card bill a debt? Yes or no will work. Very good. Is your car note a debt? Very good. Is your student loan a debt? Great. What is your paycheck? That's like an asset. That's income. Very good. Great job, you guys. So just some general things about debt. And I know, we're just getting into this, but I think it's a really good idea to be aware. I think everyone here, by the way, the fact that you even came here and committed your time today, to me, you gave me your time and your time is very valuable. I can always make more money. I can't make more time. So I really appreciate you spending some of it with us. What's really important about debt is to know how much you owe, who you owe it to, how much the payments are, and really kind of what the terms are. So you kind of need to know, okay, I know my power bill comes every month and hey, it could be variable, or maybe you went to the power company and said, I'd like a fixed payment every month. I know I do that because mine's kind of expensive. So I know that my power is going to be $300 due by the 10th every month. That gives me kind of that comfort to know what's coming. And it's not surprising when that happens and it's built into my budget. Does anyone have any questions about debt? Is there any good debt that you could have? There you go. SSI. Yep, that's income. Income and assets. Great. There are examples of good and bad debt. And we're not going to say anything is bad today, if you will. But there are times that you take on debt to help you with a future goal. For example, when you take out a new car loan, you might not have all that money up front, but you're taking out the car loan because I'm going to be able to take my kids safely to daycare or school, and I'm going to transport myself to work, and it's going to provide me the safety and comfort I need. I kind of consider that a positive debt. I think student loans are a positive debt. I mean, you are promising future work for past debts. However, you likely will increase your income if you finish college or a technical school or a professional skill. So it can be considered positive, if you will. Mortgage debt could be considered positive. And by that, I mean, Citizens as a bank can lend you money and you can actually purchase your largest investment, your home. You get to live there. Home becomes part of your family. Your kids are raised there. You have holidays. And mortgage debt and mortgage interest is something that you can actually deduct on your taxes. So there's some forms of what I would consider positive debt. Next page.
Amy, actually, before we move on, we do have a
Yeah.
question on the topic of debt that I'm confident could bring us to a whole new hour of conversation. But
Go
we
ahead.
had somebody in the chat ask us, if you're in debt, is it still good to start a Roth IRA?
I love that. And you know what? You're talking about something that is very near and dear to my heart. The balanced equation of life, if you will. I think it is always a good idea to save for the future. And, every little bit helps. Like I said, we have lifespans that are going up into the 80s and 90s, and you have a certain concrete period of time to save for retirement. And, you know, a Roth IRA, a 401k, any type of savings that is earning interest for the future is an absolute positive. And I like to say, don't overwhelm yourself. Even if you decide, oh, I can't put away $100 a month, but if you could start with $5 a week and $20 a month, that's better than nothing. So I think that's a great question. I love how you already have a little bit of fiscal discipline like built into your thinking. That's fantastic. And I really do applaud. That's a great question because honestly, there's always going to be some type of debt in your life. I mean, I might not have any credit card debt because I pay that off every month, but I still do have a mortgage and I will until it's paid off. I need a place to live. Owning my home is more advantageous than paying rent. So I consider that a positive. But definitely, I'm always trying to figure out new ways to save or how to put more away. But, you know, sometimes just even knowing where to start, it's fantastic that you've already kind of built that reflex and that muscle into your thinking. Awesome. Okay, next page. And very, very good segue. Olivia, you are an awesome co-host. Thank you. Incurring debt. So I know I told you I would not cover the PowerPoint page for page, but we talked about purchase of assets and potentially how that could cause the incurrence of debt. My examples were, you know, autos or, you know, an auto loan or a truck or, you know, an RV or maybe a camper if you like that. And a mortgage. You know, these things aren't necessarily negative, but sometimes it simply allows you to afford something that you didn't have cash on hand to buy. You know, I have to be honest, I know I buy my cars used and I pay cash, but I'm also a little bit cheap because a car is just a depreciating asset on wheels. But my home, of course, I mortgaged my home. I didn't have, you know, X amount of dollars just laying around. So you will plan for these large purchases. And when you do have the thought that you want a large purchase and you're ready to plan for that, you'll prepare for it. You know, one of the things that we talked about is you knowing what you owe, to whom you owe it, and how much it is. That is going to be something that, you know, take that away from here, that it's a good idea for you to know that because that reflex or muscle or discipline about paying your bills on time will prepare you for those larger purchases. It actually is also how you will build credit, if you will. Great question on the savings again about the IRA, but my first step to savings is even simply a savings account. You'll want some money liquid in the event there are emergencies or unexpected bills. I know a lot of folks, when I asked about debt, said medical debt. You know, we all don't mean to incur medical debt, but we all know that health insurance does not cover 100% of your medical obligations. It just doesn't. So there's always going to be a copay or maybe a prescription. Or what happens if you have a plan where you have a high deductible plan and you have to pay a certain amount up front before your insurer kicks in. So it's a good idea to definitely set aside what you can for unexpected expenses or emergencies. I always say medical is emergency, but emergency is my heater that's going in my condominium in Arlington, Virginia that someone rents for me. It's about to be October up here. It was 48 last evening. They will be getting a new heater, but guess what? I'll be debating whether I'm going to take money out of savings to pay for it. Am I going to put it on a credit card? Does the company that I'm going to purchase the heater from maybe offer 0% financing? I'm going to be figuring all that headache out in the next couple of days. So happens to everybody. And I do want to touch on one thing about wants versus needs. When I asked about debt, everyone actually talked about essential debts. Everyone was very conservative. They were like, got to pay my car note, need to pay my credit cards, have to pay for childcare. Nobody said like wants, which was amazing. That means you're already very disciplined, but wants are something you save for. Like everyone works really hard. You want to be able to take a vacation. Wants, think about it. I'm starting to put money away in my Christmas fund and set my budget. But although America will tell you Christmas is essential or the holidays are essential, no, those are luxuries. Not everyone in the world gets, you know, the celebrations we have here. So want is a date night, going out with my husband for, you know, a dinner at a place that we normally wouldn't go to and it's fancy. Those are luxuries. And even though the food is essential to life, the nice dinner is not. So just a little bit of wants and needs, if you will. Next page.
We do have a question in the chat, somebody seeking to know, can I use debt to buy equipment for content creation?
So depending on whether you are a individual or business owner, there are many ways for you to use it, finance whatever desire you have. If you're an individual, you could use a credit card. If you've actually established a business, you, depending on what the expense of that business is and what your business plan is, you could get a small business loan for things like that. I'll tell you, I'm an independent contractor as well that has my own company. I use my Business American Express card. You know why? Because then I know everything I've spent and what all my expenses are that year for my business. And I actually pay for that out of my business checking account. And it actually helps me with my accounting at the end of the year if I keep that all segregated. So absolutely, you may use debt to finance, business needs. It all kind of depends on whether you're an independent contractor or you've actually established a business that has a license and is operating, in a manner that is standalone to you yourself. But yes, absolutely. And I love that somebody's talking about businesses and side hustles, and I've got a very motivated team on the line, I can tell. Awesome. Well, I love that you've asked about that. And I will tell you that I think that debt is something that unfortunately sometimes is perceived as negative, but I am a big fan of looking at things in the positive always. And I think that very often we do take out debt for long-term goals. For example, student loans or that auto loan where okay, I need a new car now. The other one's not quite working, or I need a bigger one because I just had a beautiful baby that needs to, go to daycare while I go to work. As long as you can see that positive end, and like a car loan is generally between 5 and 7 years, you have a horizon, when it's going to be paid off, you're going to take care of it. So it's not so bad. When you're purchasing a home, you actually build equity in that home. You actually create an asset. You have the ability to write off the mortgage interest at the end of the year, which actually puts you in a good position with your taxes. So very positive debt. Those debts that are discrete and have an end to them, a maturity date, if you will, sometimes are a little more stressful than, or a little less stressful than ones that perhaps you incurred without that conscious thought. It wasn't something that you planned. Perhaps you were using your credit card a little more frequently than you chose to. Perhaps you just weren't thinking that, hey, you know what, I'm fortunate. Yes, the heater's broken, but I can figure out a way to pay for it. But what if I didn't have a way to pay for it? And what if I put it on my highest interest rate credit card and looked at that and went, I just spent $20,000. How am I going to pay this off? So it's first and foremost, you always want to know how much you owe and to who and how long it's going to take to repay. And this slide is just a great example of looking at it in digestible chunks about how exactly, should you get into trouble with debt, how you could pay it off. In the upper left-hand corner, I love this strategy, high cost debt first. So part of, knowing what you owe and to who is also knowing what interest rate it's charged. So credit cards, depending on, where you are with your, in your credit journey, can have very low introductory rates. If you have, a newer card or you've shopped around for a card, or if you have, unfortunately, if you have, run up debt, it can affect your rate. Credit cards are an adjustable rate product. So they generally are a higher interest rate than if you were to take out perhaps a personal loan, or if you were to take out a home equity line of credit. So a great way to kind of start to smooth out a debt issue is to look at the interest rates first. I would rate them, high to low. And for me, the progress would be, oh, I know I'm taking care of what I feel like is the highest priority is. It's definitely fortunate to be able to go to a bank and borrow money, but the bank sets the interest rate based off of your credit profile and how trustworthy they feel you are and your previous track history. So the better credit you have, the lower rate you have. So look at that higher cost debt first. There's also, I believe Alex just popped in here too. Is the velocity method good? These are all good ways to approach things. I think not having an approach is worse. So, really it's what you react to. I like to pay off high cost debt first because it scares me. I hate knowing that I have interest accruing on a past purchase. So I do it that way. But there's the snowball method that, also it's a different way to look at it. You might look at the smallest one first and need that, quick fix of, well, I've paid off that credit card at a $500 balance and I was able to pay it off in 3 months. And now I'm paying more to that next card that had a $5,000 balance, which seemed a little overwhelming. The velocity method, I've looked at that as well. They're all positive. I think having no strategy is worse than deciding what strategy you're going to take, if that makes sense. The bottom two are really for when you've gotten to the point you feel you might not be able to manage the debt on your own. And I know everyone here is going to take great care of their money and their time and their mental health, and they're not going to get into this situation. But there is, sometimes where things have become a little overwhelming and you may seek outside advice. You will have to likely pay those firms to assist you with that. The top two I mentioned are free. You figuring this out on your own is free. Debt settlement companies, they basically negotiate on your behalf to reduce the amount owed, but you will need to pay that in full and you likely will no longer have the use of, for example, that credit card. Debt consolidation loans and prepayments, that's really a loan. All that is going to be is that you're going to take that debt and have it repaid to the original creditor and take on a new debt at different terms, likely lower than the original creditor. So these are options. But I think everyone here is going to be really smart because they're going to know who they owe, what the rate is, when it's due, and they're going to be a little more fiscally responsible. So it's not going to be the deer in headlights. You're going to know if it's accruing. And like we said, when looking at, higher cost purchases or longer term, larger expenses, you're going to be very litigious about how you think about taking on that type of debt.
And Amy, we have a question from an attendee who's curious, how do you rate them highest to lowest if they are variable interest rates?
We'll always buy the rate, and depending on, and Kristen, that's a great question. That was part of alludes back to how much do I owe, who do I owe it to, and what is it going to cost? And what it's going to cost is the rate. Depending on, and you would actually need to kind of pull out your card agreement or your loan agreement. If these are adjustable rate debts, it's going to tell you when those rates adjust. Good news, the Federal Reserve cut rates by it was 50 basis points about 3 weeks ago. So if you have adjustable rate debt, your payments will be going down in the near future, which is good. That said, credit cards are generally always an adjustable rate. So, when you think about things, initially that payment could be X, but if the rate environment is going up, that minimum payment could increase. So I would and this is just me geeking out. Obviously, I spend time in this all the time. I have all my debts listed in Excel by when it's due, what the minimum due date is, what the rate, when the rate changes, and when I'm air quoting maturity date is. If it is a loan, the maturity date. If it's a credit card, I've generally planned out how long it's going to take me to pay off, and I've picked a maturity date because I'm not going to put something on a credit card if I can't pay it off in my mind, at the most a year. Generally, it's 3 to 6 months. We'll see about my heater. That one's probably going to be a year. Unless who I contacted today has 0% financing, which they mentioned, and then I would take that in a heartbeat. But these are big expenses. So I like to be able to know the horizon because I know how much I make per year, per hour. and I know what my debts are. So I've already known upfront the work that I've obligated myself to repay and how long that will take. Because, you know, although you might not think about every job being dollars per hour, I still do, because my time is valuable. Oh, wonderful. We've got some financial educator tips in here. And so with the high cost debt, I would rate and list all of your debts based off of the highest rate to the lowest rate. If they are adjustable rate, you're going to need to look at the agreements and know when it adjusts and keep track of it. Obviously, I do this a little bit, at least once a month. I look at all of this. This way it doesn't get out of control. Excellent. Well, this is a positive one. I love the happy path. I love the happy path, which is where we thought about taking on a debt before we, I don't know, put whatever it was on that credit card and we paid it off in 90 days or used, 0% interest. We paid for it on time and it was done, it was paid off. There are times, and we alluded to it earlier on that repayment slide, where, things can go awry. Things can happen. Especially when you're dealing with a bank, you do owe them funds. I encourage transparency. There is always things happening in life. If there is, the opportunity that potentially you become behind, be transparent. The bank obviously gave you the funds in good faith and would not have done so if they did not think you were a viable lending risk. So they'll want to know if something's happened in your life. Things happen, people lose jobs. If you're in a, marriage or a relationship, if there's a death, a divorce, there's illness, things of this type, those are called hardships. And sometimes that can lead to becoming past due on, debts because you've lost income. Like, if there's two spouses working and suddenly one isn't, that changes your financial picture. If you become divorced, you used to have two incomes, now you have one. That changes the financial picture. It's not, a negative, but it's a change in circumstance. And if you do become past due and start to get collections notices, I do encourage you to be transparent with your lender, because for those reasons that I explained, they would want to know that. And they would go, oh my goodness, there's a reduction in income. What possibly can I do to help this borrower who we placed our faith in that we knew was going to repay? They just hit a road bump or a speed bump, if you will. So this, I'm going to say unhappy path, but it's not unhappy. It's just not the straight path, if you will. So there are times when we take on debt and we miss payments for the reasons I just explained. Unfortunately, it could be illness, it could be death, it could be a divorce, it could be just a drop in income, and you could fall into default. That said, if you happen to get near default, please contact your lender, explain your circumstances, and there is the potential where they could work this out and it wouldn't go further into default. You could go into a repayment plan, it could go into forbearance. They could look at the credit terms temporarily until your income is restored. But now back on the not so happy path. In the event that does not happen, it could be charged off, meaning that can't be collected. So if they've charged it off, they're not coming after you anymore, but it will be on your credit. And Olivia mentioned over here, we've got collections. Collections really is you're past due and we're going to pursue you until you actually do collect. So charged off is that's the bank is, they've stopped coming after you and you're going to have a negative mark on your credit. Whereas collections is maybe you went 30 days past due, paid a late fee and came, current, or 60 days up to 90. But again, I encourage you at all times that if this does happen to you and there is just some misstep or, happening in life that reduces your income, that disrupts your payment schedule, let your lender know, because they will want to work with you and hopefully not pursue any of those more stringent paths, if you will.
Thanks, Amy. Before we move on to steps to dealing with debt and collections, we have a question in the chat about those adjustable credit card rates. So they're curious, what does adjustable rates mean and how do you find out the adjustable rates for different credit cards?
Great. Great question. So if you already have a credit card and it's an adjustable rate, probably on the second or third page of your statement, you know, the first page will be like your minimum payment, the address due, all of that. Then there'll be your transactions of what you spent money on. There will be a section that explains how long it will take you to pay it off. It was actually something that was designed by the Consumer Financial Protection Bureau. It's a disclosure that is now required on credit card statements that tells you what the rate is, how to calculate it, and if you were only going to pay the minimum amount due, how long it would take you to pay it off. So it'll say, if you pay, I don't know, for example, the $1,500 that is owed today, this will cost you nothing. If you pay the minimum payment of this $15 at your 30% rate, it will take 5 years for you to pay this off. And there'll actually be it's the third or fourth page. I wish it was the first page, but it's not. It's usually the third or fourth page of your credit card statement. If they're front and back, I feel like it's always on the back. I don't want to say it's hidden because it's not. It's there, but you have to look for it. And it basically will tell you what the indice is of that rate, meaning is it a 1-year treasury constant maturity plus a margin? It's like a second grade math problem. It's going to be a decimal plus another decimal, and it's going to come up to an interest rate, which they will round to the nearest eighth. They will tell you how often it changes as well. Generally credit card rates can be quarterly or every 6 months. It's going to be based off of the issuer and the kind of card you took out. If you're looking for credit card rates to shop for them, you can go on, NerdWallet or Bankrate or one of the bank aggregator sites to see what current rates are as well. But if you already have a credit card, all of that information is going to be on your statement. You just have to go look for it.
Great, thank you. And then we have another question. What do you think about various types of insurance, short-term or long-term disability, AFLAC, LTC, etc.?
Okay. Well, I mean, I have to be honest. Insurance is a hedge against something bad happening. And it's not free. So I always tell folks when they're looking at their budget and their expenses, would you be better off putting that money towards paying down a debt that you know is owed? Or are you going to pay for something that you don't know is going to happen? It's really a choice. I have to be honest, when I think about, short-term and long-term disability and life insurance and things of that type, depends on your family structure. It depends on whether you're, how much debt you have, how many children you have, what your life is. I don't have life insurance. I have an estate and I have, assets I will pass to my family members. But my employer provides life insurance to a certain portion of my salary. I don't pay for it. It's actually a benefit they give us, which is very nice. Short-term and long-term disability, I don't have any, but I have no medical issues. That equation would be different if I had a medical issue that potentially could remove me from the workforce and have my income go from my current salary to significantly reduced. So a lot of that is in your, financial journey in life when you have children and form a household and have obligations. Some of these things make sense, but I have to be honest, I don't have short-term and long-term disability because I don't have any medical conditions. That said, if I had a car accident tomorrow, I'd be spending my savings to pay my bills while I didn't work. Trade-offs. So it's something that's well worth discussing with your partner and in your your fiscal plan, if you will. My husband and I don't have kids, so our life insurance goes to each other. Our house would get paid off. Like, I don't have to worry about other people, but most people are always thinking about other people. Like my nieces and nephews would receive my assets. So, but I wouldn't be taking on life insurance if I didn't need it because it's an expense. Because insurance really is just, it's waiting for the unpredicted, if you will. It's a good thing to have. And if it's something that you need to replace your income and you're not able to do so, you need to figure out how to do that at the lowest cost and the highest benefit for yourself.
Great.
And hopefully you're with an employer that offers and subsidizes some of that.
Thanks for that insight, Amy. We have a little bit less than 15 minutes left. We do have more content to get through, so we will do that, but we've been keeping up with the chat, I think, pretty well. Want to encourage people, though, if you do have questions, specific questions for Amy or for the Mental Health America team, to please put those in the chat so that we can be sure that we're getting to what's on your mind. I'll continue to keep an eye there for any questions or comments while Amy moves through some more of the content that we have to share today.
Great. All right, I think we've killed that page. All right. It's so funny. When we were just talking about collections earlier. Like I said, I would be very transparent with lenders. If you are unable to pay, they do want to know that, and they don't assume that, you know, you're simply abandoning your debts, but you do need to find out how much it owes, at what terms, when it was due. And if you need legal help, there's, if for some reason, if it is, you know, about your car being repossessed or about your home being foreclosed on, you know, that's very different than unsecured debt. You know, any unsecured debt will go through a collections process, which is just basically they will call and say, you know, can you pay a portion of what it was you owed? You know, how can we possibly work this out for less than it is? But when you're talking about cars and homes, that's a very different process. So, you know, there are times where I would advise you would seek legal help. There's credit counseling agencies. There are folks that if it is a physical asset they can take away from you, you need to know what your rights are. And you do need to be very transparent about what's happening with them, because you would lose potentially an asset if it's not repaid. But your unsecured debts, your credit cards, your personal loans, where there isn't a piece of collateral or an actual asset they can take, that really just goes through a collections process where, you know, the bank will try to see if they can make this cash flow again, see if they can alter the terms to help you, you know, reperform on paying on that debt. But that has to be, I know that is stressful and difficult. I keep stressing the need for transparency in this process, because I think that is helpful for you. That if you're able to, you know, size and scope the issue and go, okay, this is not the end of the world. I'm going to let the lender know I'm having an issue at the moment. They're trying to work with me. It's better than, unfortunately, avoiding it, because when you do avoid it, that's when things become a little more difficult. And it does, unfortunately, affect our mental health when we're not, you know, not dealing with what's in front of us. That makes things a little bit worse. Not only for you, but for those around you as well. You do have rights, though, and I do want to let you know, if you are getting calls from a lender, there are laws such as the Telephone Collections Practice Act, and the Fair Debt Collections Practice Act, where they do need to tell you what you owe and why and to whom. They cannot be rude to you. They need to be, you know, receptive to a conversation. They cannot be deceptive. They cannot say anything that is not true about what you owe. And they are to render no opinion on this situation. It's supposed to be a collaborative and respectful discussion. And so that's why I keep saying, if you're transparent, there is going to be that likelihood that they're going to go, okay, there's a noble intent here. This borrower does want to repay. This is a slight disruption in service, if you will. So. Okay. This is more about, you know, loan forgiveness, cancellations, and discharges. You know, there is the ability that if there was something that happened that due to beyond your circumstances, say you went to a school that closed, you know, the government actually is very cognizant of the fact that higher education and technical education, not all providers are created equal. If you happen to go to a college or technical school that went out of business, generally you do have those student loans discharged, as in the federal government will consider that debt invalid because you may not have received a degree, or that entity no longer exists to collect it. So if you happen to have encountered that circumstance, there is relief there. There is another way by which you could actually have your student loans excused, called public service student loan forgiveness. Generally, this is for civil servants, for folks that choose to become teachers, nurses, could be law enforcement. There is specific guidance and we can share that information with Olivia and team to share with folks. If you happen to have taken on a civil service job, if you work in that role for a certain amount of years, your student loan can be forgiven. Teacher loan, that was actually, the next one I was going to. So teachers, some of the most amazing civil servants in the world, they, educate our communities and our children. That is not a small job. And college is not cheap. So there is actually a teacher loan forgiveness program. They have them at state and federal level. So these are ways to get relief from debt that was positive debt, but possibly, causing a little bit of stress in life. If for some reason, and I know we talked about this earlier, if you had a long-term disability or a permanent disability, loan forgiveness, it's often possible if you do advise that you're permanently disabled and that your income has dropped significantly from the time you incurred that debt because you're not able to work as you did. And finally, in the event you pass away, generally, in most states, debts are forgiven. It's something that, would be handled through your estate, but hopefully put some relief to, your family who are managing the finances after you depart from the world. Next page. There we go. Public loans for, thank you. There you go. Public loan forgiveness. I know about it because at one point I worked for the US government and I did not work there long enough to have my student loans excused. I went back to private industry and paid them on my own. So medical debt. I know that when I asked about debts earlier, a couple people said medical debt. It happens more often than not. We're trying to do the right thing. We try to pay our bills and you end up with some test or some x-ray due to an emergency and you're like, what? This is $800 and my insurance covered $200. Sometimes it's difficult not to pay that. There are times where you wish you could say, can I go to the x-ray facility near my house and do it for $200? And I went into the ER and it was $1,000. If you don't know what the costs are up front and it's an emergency, it's an emergency. Expenses do add up. There are, it can be confusing. There are now limits on what can be kept on your credit report with medical debt when it is not repaid, which is a good thing. But it's very difficult because I know there are times where you don't intentionally incur a debt whatsoever. Try and do the right thing for yourself or your family. And, you're doing what is right to make certain everything goes okay. But sometimes that can derail your plans, if you will. Next page. Oh, okay. Spending and savings. I, honest to goodness, have probably been talking about this inadvertently the whole time. I'm sure everyone knows what they make, so you know what your income is. And I've been beating to death. You should know what your bills are, whether it's a piece of paper or a spreadsheet. It's best to know, what is owed by when, to whom, and when it would be paid off. And this is a great example of this. I also love here that looks like this person is a hustler, or maybe job pay 1 and 2 is maybe, husband, wife, partner, whomever, but they've got 2 income streams. They have public benefits, which is amazing. They've got, they don't have child support or alimony, but they can see what their income is. They know what's coming in and they know if there's any more than, for example, in that second column, if there's any more than $3,600 this month, I might have to take on debt. I might have to use a credit card, for example.
Amy, we have a question in the chat about
Sure.
student loan debt.
Yes.
One of our attendees would like to know, does student loan debt look bad on credit if someone fell behind on payments?
It's a great question, Corey. And first and foremost, if you are falling behind on student loans, the first thing you should do is contact the loan servicer. Depending on whether it is a private student loan or a federal student loan, there are repayment options definitely for federal student loan based off of your income. So there are income-based repayment options. And if for some reason, that minimum amount that you have is not affordable, you need to tell them, because there have been, forgiveness programs or at least alterations in the terms on federal loans in the last couple of years that have created more affordability. Private loans, they have their own ability to set the payment terms, but ones that are actually the federal government, they have public loan service forgiveness, which we've talked about. They have income-based repayment, and they also, you know, will renegotiate the terms in the event of delinquency. As long as you are attempting to pay, depending on how past due you go, if you're current, your credit is fine. If you go past due and you're not contacting anyone, that does have the potential to, you know, impair your credit, if you will. They will start reporting you 30 days past due if you haven't requested forbearance, if you hadn't said, oh, I went back to school and can't repay this right now. So that's why I keep stressing the importance of being transparent with your lenders, because they definitely do have protections for folks with federal student loans, and they have altered payment plans depending on where you are in your kind of financial life, if you will. But I would look up income-based repayment plans because they can be as low as 1% of your income. And they would count you current if you're paying even that small portion of the balance owed.
Thank you, Amy. We've still got a bit of content to go. We've got just about 2 minutes left together. I want to make one last call for folks to put any questions that they may have in the chat. We may not have time to answer them live, but we'll be sure to get answers to your questions along with the materials that will circulate after this call. And that includes the slides that we won't be able to get to today. We did record the presentation, so that will also be circulated along with the materials. And like I said, those extra resources that we didn't have time to cover. But just wanted to thank everybody and so much for their time today, for attending, for making the chat so robust. And Amy, thank you for sharing your expertise. It's always so great to get to collaborate in formats like this. Again, thank you all so much for attending. Want to remind to keep an eye out for replay and other content information, and also for more information about our session in December. We hope that for those of you that have been on this journey with us since session 1, that you'll see us through till the end. If this is your first time joining us, thank you. We hope to see you again in December, and we look forward to continuing to build upon what we've established here. Thanks again, Amy, and thanks to our friends at Mental Health America for helping share this platform with us.
Thank you so much for listening to us. We cherish our time we spent with you and everyone who joined. I really appreciate the investment you're making in your time and mental health.
Thank you both. Thank you, Amy. Thank you, Olivia. All of the information provided today by each of you has been so valuable. Thank you, everyone in the chat, for asking such great questions and for being so involved. So I will close us out. Keep an eye out, like Olivia said. We'll be following up within the next week with an email. You'll get the recording, you'll get the rest of the slides, and all the resources that we've shared here today. Thank you, Amy and Olivia.
Appreciate it. Thank you.